Good morning, good afternoon, good evening, whatever time of day you're watching this. Thank you for joining me on another video. Today I'm going to talk about insurance rebuild valuations, insurance rebuild cost, your sum insured, your value at risk. Regardless of what you call it, it catches a lot of people out. Any regular viewers of our channel will know that we do a lot of insurance claim work, fires, floods, escapes of water, that kind of thing. So it's something we come across a lot. And it's increasing, particularly post-COVID, it's increasing. I've said before on my channel, if you like what we're doing, please like and subscribe. That'd be bloody marvellous. It helps the algorithms, all that rubbish in YouTube, so it helps more people get to see our videos. So, insurance rebuild costs. Look, insurance generally, you as the policyholder have a duty to provide correct information to your insurance. Misrepresentation can, and in our experience will, potentially result in insurers repudiating your claim. Basically means they throw it out. No, this isn't a claim. You've lied to us. Goodbye. So buildings insurance is slightly different to car insurance, which I think most car insurances are pretty much the same. But buildings insurance is bespoke for you and your house. And it's a contract between you as the policyholder and your insurer as the insurer to adequately insure that house. So you provide information to your insurer reviews that information, decides what level of risk that it's posing to them, and then will give you a premium offer based on that level of risk. If you are unfortunate enough to have a buildings insurance claim, fire, flood, escape water, whatever, one of the first things they'll do is look to see if you've honoured the insurance contract. They will look into various elements such as the building type, the construction, any flat roofs, any spray foam insulation, the age of construction, and most of all, the sum insured. I'm not in this video going to consider fraud, because if you've decided to commit fraud, and fraud unravels everything, and your claim's thrown out because of fraud, that's tough. You've tried to outwit the insurers for whatever reason. It hasn't worked because they're probably much more clever than you. You made your bed, you've got to sleep in it. So I'm not going to focus on that. I'm going to focus this on most genuine misrepresentations where perhaps people haven't been aware and not quite sure. But ignorance isn't defence in the eyes of the law. So we'll look at some bits and pieces. Of those few items I looked at a moment ago, I'm going to go through one at a time. So building type. This really is unlikely to result in any issues because most people are going to know if it's a house, a flat or a bungalow. So it should be fairly straightforward. Construction. This can actually catch a few people out. Anything beyond traditional construction, the insurers want to know about it. Now, what is traditional construction is then a reasonable question. In my view, timber frame is perhaps the most traditional construction you could have. Cob is the most traditional construction you can have. Yet nowadays they may not be considered traditional construction. It's beyond solid brick or cavity brickwork with a pitched and tiled roof would generally be considered traditional construction. So if you have a house of non-standard construction, such as wimpy, no fines, Lang easy form, anything like that, or cob or potentially timber frame, you need to tell your insurers what the construction building is. That is going to change their perception of risk and ultimately whether they're going to insure you or not. Quite often, insurers will ask how much flat roof have you got of your property, so the extent of your flat roofs, and you need to obviously be honest, that goes without saying, but you need to be as accurate as you can. If you state you've got 10% flat roofs when you've actually got 50% flat roofs, then you're going to be in for an issue, and I'm going to come on to this in a claim in a moment. But if you say you've got 10% and actually you've got 12%, then I don't think that's going to be a particular problem. Some insurers now are asking if you've got spray foam insulation in the roof space because of the potential increased fire risk. If you're unfortunate to have this and you haven't got rid of it yet, and even if you're thinking of doing that and getting rid of it, you need to tell your insurers. Your renewal needs to be accurate on the day you've told them everything. So if you're going to have it taken out in 2 or 3 months' time, doesn't matter. Tell them you've got spray foam to be more accurate because anything could happen over the next few months. That brings me on to age of construction. Age of construction is fairly straightforward, but we did get involved in a claim a few years ago where there was a typo. An 8 and a 9 was the wrong way around, resulting in a difference of around 90 years. And the insurers repudiated the claim on the basis of that. So I'll come on to that in a minute. But if you've got a property and you know the age of construction, perfect. If you don't know the age of construction, you need to really find it out. You know, Victorian, look at the Victorian period when that was from. Look at the Georgian period when that was from. Is it interwar? If it's interwar, it's 20s and 30s. If it's post-war, fine. But post-war is not a lot was built in the late 40s, so we look into 50s, 60s, 70s, 80s, and so on. So you need to be reasonably accurate with the date your property was insured. And that brings me on to the sum insured. Now this, in my experience, in our experience, is the big one. This is where most issues arise on repudiated insurance claims, is the sum insured. It goes under different names: insurance rebuild valuation, fire damage reinstatement valuation, the sum insured, the value at risk. Essentially is how much is it going to cost to knock down that building, redesign it and rebuild it to the standard it is now, subject to complying with current building regulations, etc. And that is your sum insured. That is how much your insurance policy should be taken out for as a minimum. You shouldn't really try to skimp on this. I'm going to come to reasons in a minute, because there have been so many price increases and inflation changes, particularly since COVID. Some materials went up 200-300% during COVID and they haven't really come back down. So if your last valuation, perhaps when you bought your property, was 2018, there's a good chance that your sum insured is going to be woefully low, so it really needs to be checked. So let's look at a few bits. First of all, accuracy. In the event of a claim, doesn't matter how big. We work on big insurance claims because that's our business. That's what we do. We don't work on the small 4, 5, 6, 10, 20,000 pound claims. But whenever you have a claim on your house, the first thing your insurers are going to do is work out your value at risk or your sum insured. Either the loss adjuster is going to do this, or they're going to send out one of their in-house surveyors to do this. And as I said before, this is a cost to demolish your house, redesign it and rebuild it. So it includes all professional fees, architects, surveyors, structural engineers, everything else that's needed. It varies from insurer to insurer, but if you're generally within about 15% or so of that figure, let's say if you're insured for 100,000 and it should be 110,000, that's probably not going to be an issue. Please don't take my word for it. It's because it varies from insurer to insurer, but around 15% is a kind of reasonable margin of error. But that certainly does vary from insurer to insurer. But beyond that buffer, if you like, you get into a situation where things can get complicated, and the further you get from that buffer, the bigger the issues become. So before I get into these issues, I'm going to look at why and your insurance generally. So let's assume you've got a nice 4-bedroom detached house, and the cost to rebuild your house is £400,000. The insurers have worked that out, perhaps their surveyors worked that out. But your insurance is only for £300,000. So that means you are 75% insured or 25% underinsured. So in the event of a claim, your insurance liability is capped at 75%. You've only insured 75% of the house. Now, that doesn't mean to say your insurers are going to pay out up to 75% or the £300,000 if a claim happens, if it's a major claim, because you're only insured at 75%. So if you have a smaller claim at, say, £100,000, you're not going to be paid out £75,000 because you've only insured 75%. So you may find you're in the position where your payout is actually £56,000 or thereabouts. So it's 75% payout of the 75% you've insured of the overall amount. And this is why it's so important to get it right. If you don't know, or if this is confusing, the best thing you can do is speak to a broker or speak to a local surveyor to get a new insurance rebuild valuation or some insured calculation done of your property. So it is critical, and depending on your insurers, not so much the value of the claim, although that's going to kind of sway them a little bit. If it's a £5,000 for a small little impact damage because you reversed into the bay window at the front, they may look on it a bit different to if it's a £300,000 significant fire. So realistically, in most claims, in our experience only, this is by no means legal advice or insurance advice, but one of three things will happen on this basis of your 75%. So best case scenario, your insurers accept liability on the claim and you get payout up to the value of 75%. So you have a £100,000 fire, the fire's going to cost £100,000 to repair your house. Best case scenario, they will pay out £75,000 of that. So we're in best case scenario that you're 25% underinsured. Still, you're getting a substantial amount paid out, but you've still got to fund the rest of that work yourself. Second option, which is perhaps more likely, is that your insurers will only pay out 75% liability on the 75% you've insured. So your £100,000 claim now, you're only getting paid out $56,000. So that is a substantial reduction. And the worst case scenario is the claim is repudiated, which means they've thrown it out. They've said, this is not accurate. You have misrepresented the claim. Here's your premiums back. You can go away, mister. We are not entertaining this. And we don't get involved in all that much with those because it doesn't get to a stage where we're appointed. But we have had some matters have come to light where a claim has been repudiated for whatever reason. May not necessarily be some insured, but some have been, and the claim has been thrown out. So what I thought I'd do is I'll give you some actual examples. These have occurred, or have been involved in jobs where these are examples that we pulled out of our files that have happened over probably the last 4 or 5 years. So, and this is not about insurance knocking. This is about actual events of how they can affect the insurer or how they can affect the homeowner. And as independent surveyors, we're sat somewhere in the middle. So my first example is on building construction. It's a claim we are currently working on. Now, the original building, 2 up, 2 down Farmer's Cottage, was built out of cob construction. So clay and straw and sometimes animal hair thrown into the mix as well. This was measured reasonably accurately by the homeowner, and it was declared to the insurers that his property is 15% of the property now is of cob construction. And they said, that's absolutely fine. It's less than 25%. We don't have an issue with that. So it pays to know the construction of your building. And in this case, it hasn't affected him at all. A little note on use. We were working on a claim a few years ago in London. It was a mid-terrace house fire, quite a bad one. So we had to take the roof off. There were floor joist replacements to do, full strip out, rewire, replumb, new bathrooms, kitchen. It was around, I think, £135,000 on a 3-bed mid-terrace house. So for us, that's kind of a normal day-to-day job. Obviously for somebody that's absolutely devastating, and we completely understand that. But in terms of the surveying input, that's kind of normal for that level of claim. What they didn't tell their insurers is that it was actually an HMO. They had 5 different people living in there. They didn't live there themselves. That was repudiated. The claim was thrown out. So they've now got to fund £135,000 of repairs themselves because they lied on their form. Whether that was a slip, I don't know. Whether it was a genuine whether it was a genuine attempt to try and outwit the insurance company, I don't know. But what I do know is it was repudiated and they had to pay. Flat roofs is quite a big one, and I don't actually know why. But we're working on a fire claim in a house in South London, and the owner has declared 0% of their house is covered by a flat roof. They had a fire that we're working on now. It's about £110,000 or so. And the insurers initially repudiated the claim. They've said, no, you've got around 50% flat roofs. We're not paying out, repudiated the claim. So we issued our day 1 damage report with drawings and photos that showed every element of the external of that building. There are no flat roofs. So I have no idea where the insurers got this idea that there's 50% flat roofs. Maybe it was a slip of the keyboard by someone and they put 50 rather than 0, but that was eventually overturned. So just because something is repudiated doesn't mean to say it can't be overturned, and sometimes that will go to the Financial Ombudsman Service, the FOS, for that to happen. Okay, age. Now, this is not something that I thought would become an issue particularly, but a few years back we worked on a quite substantial mid-terrace house fire in East London. It was a big late Victorian house, and the insurance was arranged, fortunately, through a broker. The proposal form had an error on it. Whoever filled in the form typed 1981 instead of 1891. They just got those two figures the wrong way around. Claim was repudiated, misrepresented the risk. We argued that actually a house built in 1891 would have suspended timber floors, it would have cavity brick external walls, it would have a pitched and slate roof, it would have timber windows. A house built in 1981 would have suspended timber floors, it would have cavity external walls, it would have a pitched slate roof, it would have single glazed timber windows. Didn't make a blind bit of difference. They still repudiated it. So although that claim ended up being paid out, it was paid out via the the broker's professional indemnity insurance, which is a slightly different scenario. So while we're talking about kind of sum insured issues, that same house, the fire was around 800, the sum insured was around 850,000, but the rebuild value in today's money was 1.1 million. So it's around 77%. So we're starting to drift away from that 15% buffer that I was speaking about earlier. On that claim, the insurers paid to the full value of £850,000. They didn't pay a penny more, and the claim was about 970, so it did leave the owner with about 120,000 to pay out. But it was a fairly rare example of them paying out to the full value of the sum insured when they were reasonably underinsured. So, good example. A cottage with a thatched roof we dealt with a few years ago in Oxford. Client was insured for £350,000 and the damage was around £250,000. He was absolutely adamant that he would get £350,000 as his payout. I'm insured for £350,000. That's what they will give me. Tried explaining it, but he wasn't having it. So we withdrew ourselves from that claim because insurers will only ever pay out to the value of the works that are required to put yourself back in the position prior to the fire, and not the sum insured. Unless obviously you go over the sum insured, then it's slightly different. What else we got? We dealt with an escape of water claim a few years ago in North London. The client on this one did everything that you would reasonably expect someone to do, but it was kind of quite obvious that it was wrong still. So it was a substantial house. It was a big 3-bed mid-terrace house. And he used the BCIS online thing that I think you can get through the RRCS or something like that. I haven't used it for years myself. And it's produced the value of his house based on the fact that it was 3 beds, it was mid-terrace, that's pretty the only questions it asked, of £200,000. So he went and got his insurance for £200,000. Knowing full well a reasonable person would think, hang on, that's not right, the kitchen was £50,000. We've got 3 bathrooms in this house. It just didn't read right. So despite using the argument that he used the BCIS, Building Cost Information Service online calculator, the insurer still repudiated the claim, because even to a lay person, a property that's worth £2.5 million is going to cost more than £200,000 to rebuild. What else? The other ones, we've got a fire claim we did on an annex a few years ago. The homeowner was a really practical guy, a bit like myself. So he only insured the cost of rebuilding that would be the cost to him. And the claim was repudiated because he was significantly underinsured. We tried to help. We couldn't, unfortunately, because he was that far underinsured. But his argument was always he would do it himself, he would sort it himself. So when we're going through stuff, I said to him, well, what about clearance costs? I'll clear it myself. I'll hire a skip and I'll do it myself. What about redesign costs? Oh, I'm an architectural technician, I can do it myself. Okay, what if you died in the fire? Penny dropped. This is why. Yes, he could do it all himself. I wouldn't doubt that for 1 second. But if he's not around to do it, someone else has got to pick up the tab for that. And he was massively underinsured for it. I think he was something like 50-60% underinsured. Because he hadn't factored in general build costs. He's just going to do the whole lot himself. So it is so important to get this right, the information you're providing about your house and the level of your sum insured. What insurers are asking as part of the contract is that you, potentially as a lay person, provide this information at a level of accuracy that you may not know. So that ignorance is not a defence in the eyes of the law. So if you don't know, find out. If you don't know how to find out, get a local surveyor to do a building reinstatement valuation for you, a sum insured calculation, an insurance rebuild valuation, whatever you want to call it. Get them to do one. And speak to a broker. A broker will be able to organise everything for you, and they will know if what you're providing is inadequate and if your sums insured are correct and that kind of thing. So you may think that doing all this is expensive, but please rest assured, if getting it right is expensive, try getting it wrong. Bit of a doom and gloom one today. Do apologise for that in a way, but I don't apologise for the fact that you need to get this right. Since we've been doing insurance claims, we've revalued our own house in the last 10 years, maybe 4 or 5 times, because if you get it wrong, it can cost you tens, if not hundreds of thousands of pounds. And I don't know about you, but I haven't got that kicking about, and I don't know many people that have. So it really has to be as accurate as you can possibly get it. So once again, thanks for watching, and I shall see you on the next one.